Good afternoon, everyone. I am CS Suruchi Verma, and it's with a great pleasure that I welcome you all to the webinar on labor codes, overview and way forward. With the recent amendments, the scope has been expanded of the labor codes, ensuring the protection of workers across the country. The implementation of the four labor codes has expanded social security, stronger protection, and nationwide probability and portability of entitlements. The code placed workers, especially women, youth, unorganized gig and migrant workers, firmly at the center of labor governance. By reducing compliance burden and enabling flexible modern work arrangements, the code boosts employment, skilling, and industry growth, reaffirming the government's commitment to pro worker, pro woman, pro youth, and pro employment labor ecosystem. This session by ICSI intends to cover the discussion related to consolidation and simplification of the labor laws into four comprehensive codes on wages, social security, industrial relations, and occupational health, safety, and working conditions. We are very privileged to have the presence of our eminent speaker, Mr. Puneet Gupta, partner EY India, with us. We look forward for a fruitful and enriching session with you, sir, and we welcome you to the session, sir.
Thank you so much, Suruchi. Good afternoon, everyone.
Good afternoon, sir. It gives me immense pleasure to formally introduce our speaker for today's session. Mr. Puneet Gupta is a partner with EY India in the People Advisory Services practice and has been with the firm for over 17 years, advising organizations on compliance with central labor codes and employer-related regulations. A chartered accountant with an AIR 16 and a gold medalist with the AIR 1 in the ICSI final exams, he brings strong academic credentials to his professional expertise. His work spans financial and non-financial impact assessment, compensation and benefits structuring, HR and payroll practices, social security and employee relations. He has an extensive experience in provident fund advisory and compliance. He has also represented industry concerns before Ministry of Labor and Employment, authored articles on labor codes and social security, issues in leading business dailies, and issues a monthly newsletter, EY People and Regulations Insight, which highlight judicial precedents and regulatory updates impacting employers and employees. So we are very honored to have you with us today. You may please proceed with the session, please.
Yeah, thank you so much, Suruchi. Good afternoon, everyone, for joining in. We know that the labor codes. Are you able to see my screen, Suruchi?
Yes, sir. We are able to see your screen.
Perfect. So we know that the labor codes have been a story for last 6 years. In 2019, the Code on Wages 2019 got notified, and then the other three codes got notified in September 2020. And I think for last 6 years, I've been on this subject. Every few months, every few quarters, there's been news that the labor codes will come in now and labor codes will come in a little later. But there's always been a lot of excitement and news around labor codes. And then finally, after a very, very long wait, on 21st November 2025, which is Friday last week, the government implemented and notified all four labor codes. Now, with the labor codes coming in, the 29 current central labor laws are repealed and are subsumed under these four labor codes. Before I talk about labor codes, just a little bit perspective. Indian labor laws are a matter under concurrent list in the Constitution, which means that there are or they can be labor laws both at central and the state level. So at state level, we see the Shops and Establishment Act, Labor Welfare Fund, Professional Tax, all of these laws. And at the central level, we see these multiple regulations. The central government have took this initiative that they've now consolidated 29 labor laws under these four codes. But remember, the state-specific regulations, like especially Shops and Establishment Act, are not going away. And therefore, companies will have to harmonize and balance and ensure compliance with both. So if I talk about the laws that are getting subsumed under these codes, so the Code on Wages covers equal remuneration, payment of wages, minimum wages, and payment of bonus. There, I think one very important point is aspects around payment of wages, which initially was only, or under the earlier law, was only applicable for employees with wages up to 24,000 rupees. Now, the same principles around full and final settlement, deductions of wages, all of these concepts are now applicable for all employees. So, therefore, there'll be wider implications for organizations so far as the Code on Wages 2019 is concerned. The second code is the Code on Social Security 2020 that covers the very important Provident Fund, ESI, payment of gratuity, maternity benefit, employee compensation, and then specific laws. This is one code that could have financial impact for organizations. So therefore, companies will have to evaluate what is the financial impact and then kind of account and budget for that. The third is the Occupational Safety, Health and Working Condition Codes that covers multiple laws, but the two main ones are the Factories Act and the Contract Labor Regulation Act. Now, on Factories Act, the principles that were earlier applicable to factories under the Factories Act have been taken in the Occupational Safety, Health and Working Conditions Code. And a lot of those principles have now been made applicable for all organizations, including the non-manufacturing sector. So therefore, non-manufacturing sector will have a lot more additional compliances and obligations towards employees under occupational safety, health and working conditions codes, which were not applicable earlier. And then we have the Industrial Relations Code that covers the Industrial Disputes Act, the Standing Orders Act, and the Trade Unions Act. Again, applicable only for workmen classification. We'll talk about that. So in total, 29 labor laws getting subsumed under the 4 labor codes. Now, if I were to give you a general perspective on why labor codes, the government actually, like I said, has formally notified these codes in 2019, but they've been on this journey for many years, and they recognize that labor is one subject in India which has always been complicated with these multiple regulations, multiple definitions, multiple provisions. It's always been very complicated for companies to ensure compliance. And with rising need for simplification, with the rising need and objective mindset of the government to promote ease of doing business, it was essential to reform the Indian labor law space also, which has been done now. So from that perspective, it obviously, if you think from an organization standpoint, instead of complying with 29 laws, each of which had different definitions, different terminologies, like even a very simple thing like who's an employer, who's an employee, or what is wages, has had different definitions under the old law. Now all of those have been combined and harmonized under the new code. So obviously it promotes simplicity and ease of doing business. They're also ensuring common registrations and common returns to a large extent under these labor codes. The only issue here is that, like I said, the Shops and Establishment Act continues. So therefore, the registration under Shops and Establishment Act, the records that are to be maintained under Shops and Establishment Act, the returns that have to be filed under Shops and Establishment Act, all of those continues for organization. And then while I'm not going into each of these points, this just gives you a general overview of what is coming. The fact that minimum wages are now applicable to all, talking about a floor wage, there is going to be increased gratuity cost for organizations. And we'll talk about some of these important aspects in detail as we go along. On Provident Fund, I think there's been a lot of media myth that has been created that there'll be a significant increase in PF contribution, a drastic drop in take home. At least my perspective is that's not going to happen immediately. So there's some grandfathering that has been done for PF side. Social security is applicable to all. That's one very common theme under the labor codes. A lot more things done to promote employees' benefit, whether it is issuing a standard appointment letter to all employees or having provisions around annual health checkup and safety committee. So a lot of focus on health and safety of employees. Then again, a very overarching theme under labor codes is to promote flexibility and new ways of working. And we'll see that in multiple aspects of these labor codes, whether it is promoting fixed-term employees, which have now been specifically recognized under the labor codes, whether it is new norms of working where they're now saying that employers and workers can have a modified work arrangement where workers can work up to 48 hours in a week without a daily threshold are areas that will obviously promote flexibility, will promote global organizations to come and set up shops in India. So to that extent, there'll be employment for all. Again, very important theme under labor codes is to promote women empowerment, bring them under the formal structure more and more. 50% of India population is women, but the workforce participation is still very low. So there are aspects under labor codes where women employees can now freely work night shift without any approval from government, subject to certain safety norms that employer has to adhere to or provide. Industrial relations rescaling has gained more momentum. They have very strong provisions around employee relations and giving more voice to the employees to ensure that their concerns are heard at multiple levels in the organizations and by the regulators. Some relief to MSMEs, so smaller firms, whether it is registration under Factories Act, whether it is contract labor compliance, whether it is standing orders compliance, whether it is retrenchment compliance, some relaxations, some limits, thresholds have been increased, which will provide relief to these smaller firms. And I think if I were to give you a snapshot of a labor codes, I will focus on the need for effective enforcement. And I always say this in all my labor codes presentation that what has worked very well in India from a labor compliance standpoint over last 10, 20, 30 years will not work over next 2 to 3 years. It's changing significantly. In the labor codes, we've seen that the monetary penalty, which earlier used to be few hundred rupees, is now significantly higher. Yes, they've done away with the criminal proceedings because that again is one objective mindset of the government. But there are a lot of provisions which ensures focus on enforcement, whether it is talking about a completely digital inspection world where everything will be digitized. They're talking about a statute of limitation that will first has for the first time been implemented in India from a provident fund standpoint. So this whole focus on enforcement and compliance under labor code. So therefore, as professionals, we will have to look at these labor codes differently. Just because something has worked in the past will not work in future, and our clients, our organizations will have to look at it differently to ensure that a employees' benefits are protected, and second, companies are fully compliant with these labor codes. So that's a general overview, overarching theme under the labor codes. If I were to do a little bit of deep dive into some key aspects at EY, where I'm a partner, we focus on these specific aspects under labor codes that will fundamentally change, whether it is about employee versus worker categorization, the impact on comp and benefit, the impact on flexi hiring, policies, health and safety, a strong focus on compliance, focus on enforcement. These are themes that will change, and we'll focus on each of these one by one now. So, from an employee versus worker categorization, under the labor codes, there are two definitions, one for an employee and second for a worker. Substantive part of labor codes are applicable to all employees. So, whether you have CEO of an organization or you have the junior most level, all of them will be considered as employees, and substantive part of labor codes will be applicable to all. But there are very specific provisions under the labor codes that are only applicable for workers under labor codes. Now, workers does not mean the traditional blue collared workforce. You can actually have workers even in a non manufacturing setup or in an office organization or in the so called white collar jobs. If you look at the definition of worker, it covers anyone in a doing manuals, unskilled, skilled, technical, operational, clerical, supervisory work, but it has two main exclusions. So, someone who's in a managerial or administrative role is not a worker. Similarly, someone who's in a supervisory role drawing wages exceeding 18,000 rupees is not a worker. Now, these two terms, managerial role and supervisory role, have not been defined under the labor codes. In the past, there was a similar definition of workmen under the Industrial Disputes Act. That same definition have been carried forwarded under the labor codes as definition of worker. In the past, there have been plethora of court cases where courts have interpreted different rules and done their determination on who will qualify as workman and who's not. But if I were to give you a general principle, managerial level or managerial role is generally linked by courts to a decision making authority. Anyone who has, in some form and manner, decision making authority generally is considered to be in a managerial role and excluded from the definition of worker. Supervisory role is more to do with people manager responsibility. So if you have a team reporting into you, even if you have one person reporting into you, that you're responsible for that person on a day-to-day basis, you have authority, autonomy, accountability, responsibility towards that individual, then you can be considered to be in a supervisory role and excluded. So therefore, anyone who's in a managerial role and supervisory role is not a worker. Now, how will you determine all of this is basis substantial work that the person is doing on a day-to-day basis. There have been multiple court cases in the past where courts have felt that this determination is not basis ban, grade, level designation. This is only and only basis substantial work that the person does on a day-to-day basis. So what is the job structure? What is the job description of that person becomes important. Now, the question that you'll ask me is, why is this determination relevant? What is the significance of this? It is very important because aspects like overtime, aspects like leave encashment under labor codes are applicable only for workers under the labor code. So these principles are applicable only for workers, and therefore, to be compliant with these aspects, you will have to make a determination on who's a worker and who's an employee under labor codes. So that's one very important step that organizations will need to undertake to ensure compliance from a labor code standpoint. In fact, I would say that this is one starting step that as professionals we can take to clients or to organizations internally to ensure that this is done immediately, so ensure we identify who is the worker population in our respective organizations. So that's one big impact. The second big impact is on compensation and benefits. Now, you would know that all different statutory benefits, whether it is PF, gratuity, leave encashment, overtime, um, all of these benefits were calculated on different definitions, different reference salary under different laws. Most cases we calculate benefits only on basic salary, but they can be exception like ESI is calculated on gross salary. So it created a lot of confusion in the industry. What the government have done as part of labor codes is to bring in one consistent definition of wages. Now, this definition of wages will be applicable for all statutory benefits calculation. Again, a lot of myth that is created that basic salary or DNS allowance or basic plus DA have to be 50% of the total remuneration is actually not right. Because if you look at the definition of wages now actually covers all salary components expressed in terms of money or capable of being so expressed in terms of money, which means that any salary component that you pay to an employee, whether it is an allowance, whether it is a perquisite, all of those are now covered under the definition of wages. The term basic pay, DNS allowance, and retaining allowance are only illustrative inclusions. It does not mean that only these three components are wages. What is wages is all salary components except specific exclusions. So, in the definition of wages, in all the four codes, there are specific list of exclusions that are notified, and only these exclusions are to be ignored for calculation of wages. For example, bonus payable under any law, conveyance allowance, house rent allowance, overtime allowance, specific benefits, specific retirals are excluded from the definition of wages. So if you have in a structure house rent allowance or conveyance allowance, for example, that is not to be considered for calculation of wages under the labor codes. Then the important principle is that they put in a limit on exclusions to say that in total, all of these exclusions cannot be more than 50% of the total remuneration, which means that bare minimum 50% of gross salary has to be wages. In fact, it can be more because if your exclusions are less than 50%, then only the exclusions will be excluded and everything else become wages. And then they're also talking about remuneration in kind to the extent 15% of the total wages shall deem to be included. What is remuneration in kind? How will that be calculated? Is a practical issue that is still not fully resolved. But in essence, definition of wages, very, very important change, now covers all salary components except specific exclusions as defined under the labor codes. Now, if I were to give you an example of this, let's say you have an employee with total salary 50,000 rupees, where basic is 20,000, HRA is 10,000, conveyance allowance is 8,000, and special allowance is 12,000 rupees, total 50,000 rupees. If you were to calculate wages for this person, it's a three-step approach. Step one, we look at total salary components, which is 50,000 rupees. Second, we look at exclusions. In this structure, what is excluded is house rent allowance and conveyance allowance, which is 10,000 plus 8,000, 18,000 rupees. But the exclusions cannot be more than 50% of the total. 50% of the total is 25,000 rupees. But in this structure, of course, your exclusions are lower than 50%. So only 18,000 will be excluded. The remaining 32,000 rupees, which is 50,000 minus exclusions of 18,000 rupees, will become wages and will become the base for calculation of all benefits. So you can identify the financial impact, something which was only calculated on 20,000 rupees earlier now is to be calculated on 32,000 rupees under the labor code. So that's where the increased cost comes in. If I give you another example, let's say total remuneration 50,000 rupees, where basic is now 20,000, house rent allowance 14,000, conveyance allowance 14,000, and special allowance 2,000 rupees, totaling 50,000 rupees. Again, if you were to calculate wages for Mr. A on this example, we look at total salary components, which is 50,000 rupees. We look at exclusions, which are 14,000 plus 14,000, 28,000 rupees in this case. But remember, the exclusions cannot be more than 50%. The 50% is 25,000 rupees. So therefore, exclusions will be capped at 25,000 rupees. The balance 25,000 becomes wages. So therefore, again, the financial impact can be seen. Something which was calculated on 20,000 earlier now will be calculated on 25,000 rupees. So the cost will increase. Now, one question that I'm often asked here is, what about performance bonus? Whether performance bonus, incentives, long-term incentives, whether all of those will be covered in the definition of wages? Technically, if you look at the definition, there is no exclusion for performance bonus and incentives. But practically, I believe that it may be very complicated to cover some of these one-time components in the definition of wages. So we'll have to wait for more clarity from the government on coverage of these one-time benefits. But technically speaking, as we stand, these one-time benefits are not, or these one-time payouts are not excluded technically from the definition of wages. So that's how wages are to be calculated. Then what is the impact of this? So one impact is on minimum wages, which is again a very transformational change from a labor code perspective. Under the current law, or under the old law rather now, minimum wages were applicable only for scheduled employment. Now, under labor codes, minimum wages are applicable for all employees. So all employees in India will have to be paid minimum wages notified by the state. The second big change is that when we see minimum wage compliance, whether or not employer has paid minimum wages to an employee, under the old law, we used to see gross salary generally. So as long as employer has paid gross salary equivalent to or more than the minimum wage notified by the state, we would have been compliant. But under the labor codes, the interpretation that is coming is that wages as defined under the labor codes has to be minimum wages notified. So therefore, we may see some salary increments there. The third important principle is that the central government will now notify floor wage. In the current law, there was no formal requirement for the central government to notify any national minimum wage. They used to do that, but that was more recommendatory. But now the central government under labor codes will have to notify the floor wage, and the state governments have to ensure that the minimum wage notified by the state is at least equal to or higher than the floor wage notified. Some states like Rajasthan and all, we see a very low minimum wage from the state. Some of these states may get impacted because depending on what the floor wage notified by the central government, these states may have to increase the minimum wages. There's also this question that if, say, a state is already higher than the floor wage, can they reduce? That answer has also been provided in the labor codes that the states cannot reduce minimum wages. So just because, say, the central government has notified floor wage to be, say, 15,000 rupees and Delhi minimum wages are, say, 21,000 rupees, Delhi cannot reduce the minimum wage notified. So the minimum wage can only increase. We may see some rationalization here, some increase in cost for companies here, and higher benefit from employee perspective because they'll get higher wages depending on how minimum wage and floor wages are notified by the respective government. So that's on minimum wage. Now, two big impact areas, very, very big impact areas for organizations is on gratuity and provident fund. Uh, Again, a lot of news on whether now gratuity is applicable after 5 years of service or 1 year of service. I would like to clarify that under labor codes also for permanent employees, gratuity is payable after 5 years of service. And we know that for a 5 day working organization, the norm is that the employee should work for at least 4 years, 190 days. And for a 6 day working organization, employee should work for 4 years, 240 days to be eligible for gratuity. Those norms for permanent employees continue under the labor codes. However, the 5 year limit will not be applicable for two cases. One, in case there is death or disability of an employee, in which case they can get gratuity after 6 months also. Second, in case of an expiry of a fixed term employment contract, in which case it has been clarified under the labor codes that gratuity will be payable after 1 year of service. But remember that the 1 year threshold is only for fixed term employees. So where we hire employee for a fixed or defined term, where there's an end date to contract, in that case the individual will be fixed term employee and their gratuity will be paid after 1 year of service. But in all other cases, gratuity will continue after 5 years of service. The other big change on gratuity is how the gratuity is calculated. So under the Payment of Gratuity Act, gratuity was calculated on last drawn basic salary of an employee. But now gratuity has to be calculated on last drawn wages as defined under the labor codes, which means that if you have any employee leaving employment on or after 21st November 2025, then gratuity for the entire service period will have to be calculated on the last drawn wages, which will have inherent retrospective impact. Any employee, I would want to clarify, any employee who's left employment on or before 20th November, gratuity will still be paid basis last drawn basic salary. But if someone is leaving employment on or after 21st November, then technically speaking, gratuity is to be paid basis last drawn wages. Now, we may expect some clarity on this retrospective impact and calculation of gratuity from the government in due course. Then we would know that under the current law, there was a ceiling of 20 lakhs on gratuity to say that no employer and employee are required to pay gratuity exceeding 20 lakhs. Under the labor codes, the ceiling is to be notified by the central government, but till the date the ceiling is notified, the current ceiling of 20 lakhs will continue. So those are the major impact areas on gratuity. The two big areas for impact on gratuity is one, the fact that fixed term employees will get gratuity after 1 year of service. And second, there is a retrospective impact on gratuity where gratuity is to be paid on last drawn wages for the entire service period. On Provident Fund, again, a lot of media news that Provident Fund contributions will go up, take home will significantly go down. may not be applicable because the current provident fund scheme will continue for at least next 1 year or longer, depending on when the government rolls out the new scheme. Under the current provident fund scheme, there is a salary ceiling of 15,000 rupees to say that no employer and employer required to contribute on more than 15,000 rupees, and that salary ceiling continues under the labor codes. So, principally, as long as we have employees where basic salaries 15,000 rupees or higher and provident fund contributions are made on full basic salary, there may not be any impact on PF contributions. So therefore, it comes with a bit of good news. Provident funds contributions may not get impacted immediately, but yes, gratuity will see a significant impact for employers in terms of cost. Then the impact on leave encashment and overtime. Both these benefits, leave encashment and overtime, are applicable only for workers under the labor codes. We've already looked at the definition of worker to mean individual contributor not in a decision making role could qualify as a worker. So leave encashment provision under the labor codes are applicable only for workers. The rules say that you need to give 1 day of leave for 20 days of work. So if you go by 365 days in a year, then we'll have to give 18 earned leave. If you look at only days of work, then it could be 13 or 15 earned leave that we need to be given in a year. 30 leave can be carried forward. So if a worker has, say, 45 earned leave balance at the end of the year, the 30 leave will get carried forward. The balance will need to be in cash at the end of the year, which means a cost and cash flow issue because most companies today would have a carry forward limit and any earned leave over and above the carry forward limit would generally lapse. Now, earned leave would not lapse under the labor codes. So, to that extent, uh, companies will have to do encashment every year. In fact, the code also say that even for the 30 leave which will get otherwise carry forward, the worker can demand leave encashment at the end of the year. And the year for leave encashment purposes is a calendar year. So irrespective of any other accounting year followed by the organization, for leave encashment purposes, we may have to follow calendar year only. All leave encashment under labor codes have to be basis the definition of wages. So it's not on gross salary, it's not on basic salary, it is only on wages. So these are the principles of leave encashment under the labor codes. But I think what is important to highlight here also is the fact that especially for non-manufacturing sector, we currently look at leave basis uh, the Shops and Establishment Act. And now Shops and Establishment Act are not repealed or not subsumed. So at least for workman category, we may have a both set of laws prevailing. We have the labor codes also and the state SNE also. Companies will have to therefore look at both laws and then prepare a leave policy that works or is compliant to both laws. Where for non-workmen, we don't have any principles under the labor codes for leave. There, the current SNE Act or the Shops and Establishment Act will continue to prevail. So it's slightly complicated because depending on states, depending on state rules, depending on state SNE acts, these aspects may undergo a change. Overtime, again applicable only for workers under the labor codes. The rule is clear now. The worker cannot work overtime or a company cannot ask a worker to work overtime without obtaining workers' consent. Uh, Overtime has to be paid as per the daily and weekly threshold limit. The states will notify the limits for respective states, so we will have to wait for the final state rules to be notified. All overtime has to be paid at twice the wages as defined under the labor codes, and there's generally going to be a limit on maximum overtime, which, as per the draft central rules, is 125 hours in a quarter. So, overtime for workers under the labor codes will be applicable as per the state norms. We'll have to wait for the state rules to come in to determine the full overtime impact. Then, very quickly, ESI and statutory bonus. For eligibility purposes, you know that there is a salary ceiling both for ESI and statutory bonus. So, ESI under the current law, if employees are on a gross salary up to 21,000 rupees, then ESI is applicable. Now, under labor codes, ESI is applicable if wages as defined under the labor codes is up to 21,000 rupees. So we may actually have more employees covered under ESI now, because earlier the ESI eligibility was determined basis gross salary. Now that eligibility will be determined basis wages as defined under the labor codes. And second, the ESI contributions may need to be done on wages, but given the fact that the contributions are listed down in the ESI scheme and the ESI scheme is still continue to apply, it may be possible that during the transition journey we continue ESI contributions on as per the current law. So there will be some transitional phase that we'll have to work on or comply with. For statutory bonus, again, the eligibility will be determined basis wages. Under the old law, the ceiling was defined by the central government. Now, eligibility basis will be decided by each state. So, different states probably can have different salary limits or different wage limits for employees to be covered under statutory bonus. Statutory bonus, anyways, is calculated on minimum wages, so that is not dependent on wages definition. If you look at all of that, you will see two things. Number one, that there will be increased cost for companies, especially on account of gratuity, leave encashment, and overtime. And second, these are complicated topics. So companies will have to look at their current policies. Companies will have to look at labor codes provisions. Companies will have to look at state rules notified under labor codes and also the current SNE Act, and then prepare policies that are largely compliant with all. So therefore, that's the impact on employee benefits. I'll pause, Suruchi, if there are any questions or comments till this point.
Yes, sir. We have received a few questions with regards to the wages.
Sure.
So there is one question that how would variable pay be treated under labor code? Usually at senior level 40 is variable pay and 10 to 15% is RSU or LTI comprising the total CTC.
Yeah. So if you look at the definition of wages, and I'm going back to the definition, variable pay is not excluded from the definition of wages. So technically speaking, wages will cover will cover variable pay also. But I think we'll also have to look at it in context of statutory benefit that we're calculating. Right? So we're calculating ESI, which is on a month-on-month wages. Of course, you don't pay if you don't pay performance bonus or variable pay on a month-on-month basis, it will not impact the ESI contributions. Or if you look at gratuity, gratuity is calculated on the last drawn wages. So let's say if you paid an employee uh, variable pay in the month of March and that person is leaving employment in the month of October, can we are we required to consider variable pay paid in the month of March as last drawn wages are questions to which there are no answers right now. So I think some bit of positions will have to be taken by companies in implementing this law. I'm also hoping that some clarity on these aspects will come in the revised central rules that are likely to be notified in next few days. We already have the Labour Secretary, Madam Vanna, who's clarified that they're going to issue draft central rules hopefully very soon. So some of these aspects may get clarified in the draft rules.
Okay, sir. So there's another question. Are the gratuity trust and insurance policies now compulsory across India, specifically in the state of Maharashtra?
So no, these are not mandatory. So I want to clarify that for the purposes of Code on Social Security, if you have presence in multiple states, whether you're a manufacturing entity or a non-manufacturing entity, if you have presence in multiple states, then the appropriate government is the central government. So we'll have to comply with labor codes read with central rules. Uh, while if you have presence only in one state, then we still have to comply with state rules. For gratuity purposes, the requirement to set up a gratuity trust or to obtain a gratuity insurance depends on rules or notifications from the appropriate government. So, where you have an organization that is present in multiple states, Whether or not we're required to set up gratuity trust or gratuity rules will be dependent on the central rules, which are still not notified. So as of now, or under the labor codes, there is no specific requirement to obtain trust or insurance unless that is required as per the applicable rules.
Okay, sir. So what about special allowance? Will it be considered for the definition of wages?
In all likelihood, yes, because again, if you see the list of exclusions, special allowance is not an excluded component. And in my example, also, I clarified that only HRA and conveyance allowance are excluded. Special allowance is included in the definition of wages. So, in all likelihood, special allowance will become part of wages definition.
Okay, sir. Sir, can EL be kept more than 30?
Yeah, so again, it is a very complicated matter because under the state SNE Act, each state SNE or Shops and Establishment Act have a different carry forward limit. Under labor codes, the carry forward limit for workers is restricted to 30 now, and the balance leave need to be encashed. Now, here the issue will be when you're complying with both the labor codes and the SNE Act, which one will be considered more beneficial for workers will have to be seen, will have to be debated, and accordingly, policy will have to be created. But if I go strictly by labor codes, then under labor codes, 30 leave will have to be carried forward, and the balance leave will need to be in cash at the end of the year.
Okay, sir. Thank you. Sir, one last question from this section. In section 14 of the Code on Wages provides all employees will be eligible to get overtime, which is twice the normal rate of wages. The term used in this section is employee and not worker. However, the presentation is stating that overtime is applicable only to workers. This
Yeah.
is not the view shared by the Labor Commissioner, maybe in some previous announcements. How is it confirmed that all employees will be eligible to get overtime? Means there is a lack of clarity in this point.
Yeah, so very good point. Someone has picked up really well. I'll clarify. So there are two labor codes that talk about overtime. What you see on the slide and what I presented was the provision under Occupational Safety, Health and Working Conditions Code, where overtime applicability is only for worker category, right? So it's not applicable to all. Under OSHWC code, it's only applicable to workers. Now you're right, under Code on Wages, in the minimum wage chapter, they're talking about overtime being applicable to all. Now I believe that that's clear contradiction because if anyways we are saying overtime is applicable to all under the Code on Wages, why do you need separate provisions for overtime under Occupational Safety Code? So there is a bit of contradiction and complexity. One view that possibly one could explore is that because that provision in Code on Wages is linked to minimum wage, one view that courts have taken in the past is that those provisions are only applicable to employees where you actually pay minimum wages. But if you pay higher, then those provisions are not applicable. But I agree that there is contradiction between Code on Wages provisions and OSH WC code, and then you also have the state SNE Act that is applicable. So some bit of positions will need to be taken on the Code on Wages provisions on overtime, and hopefully some clarity will come from the government on that part.
Yes, sir. So one more question I would like to take up now. Does the gratuity will be applicable on retrospective effect from the point of view of an employee who has worked for 2 years plus, or only it is for the fixed term contractual employees now?
No, so one gratuity is applicable for fixed term after 1 year. So if you have a fixed term employee engaged for last 11 months and 1 month later the person leaves employment, gratuity will have to be paid to fixed term employees because on the date of termination, he or she has completed 1 year of service as a fixed term employee. For permanent employees, gratuity is still applicable after 5 years of service. So if someone leaves employment before 5 years, then and permanent employee, then no gratuity is payable. On the retrospective impact, I'll give you an example. Let's say you have an employee working in an organization for last 20 years, and that person leaves employment now. Technically speaking, gratuity has to be paid on wages now because that's provided in the labor codes itself, no dependence on state rules, etc. So therefore, gratuity will have to be paid on wages. But given the inherent retrospective impact, there may be some clarity from the government that could come on the gratuity piece. We may have to wait for some clarity to come in on that. But ideally speaking, yes, there is retrospective impact on account of gratuity for employers.
Okay, sir. So we can proceed with the session as of now, and we'll be taking up the questions next coming.
Sure. So we've covered three major areas of impact. We've covered the impact on employee versus worker classification. We've covered the impact of definition of wages on the salary structure and the inclusion exclusions basket. And we've looked at the impact on six benefits, which is gratuity, PF, overtime leave encashment, ESI, and statutory bonus. Now we look at some of the other aspects, which important one is flexi hiring. So under the labor codes, they have recognized two forms of flexi hiring or contingent workforce hiring. One is called fixed term employees and second is called contract labor. Now, fixed term employees under the old law was only covered under Standing Orders Act, but now there is a formal recognition under labor codes for fixed term employees. So companies can actually now hire employee for a fixed or defined term. So you can hire someone for 10 months, 11 months, 12 months, or even 1 to 2 years. The only condition is that that fixed term employees have to be offered the same wages and the same benefits as permanent employees. So if you have for the same role a permanent employee and a fixed term hire, then wages and benefits and working conditions for the two set of employees cannot be different. They have to be offered the same wages and same benefits. And second, gratuity for fixed term employees is applicable now after 1 year of service, which we've seen in the earlier slide. Generally speaking, there are no restrictions on the number of fixed term employees a company can hire or the period for which fixed term hires can be engaged, subject to state rules. Like at least the Maharashtra draft rules that were notified earlier had put in a limit of 20%, that you cannot have more than 20% of workforce as fixed term employees. In fact, they also said that you cannot have fixed term employees for more than 3 years, but that was only in the Maharashtra rules. So we'll have to look at state rules on these aspects, but generally speaking, no restriction on the number of or the period of fixed term hires. Then contract labor. Under the labor codes, there is a new definition of contract labor. So we'll have to look at specific facts to see who could qualify as contract labor. In general, very, very important change. In general, there is a prohibition on engaging contract labor for core activities. Now, what is core activities is debatable because the way core activities has been defined in the labor codes is the main activity for which the entity is set up, or any other activity which is essential for that main activity. So let's say in a manufacturing setup, obviously manufacturing is the core activity, but other activities that are essential for manufacturing could also be considered as core activities, and we cannot engage contract labor for those core activities under the labor codes. There are certain exceptions, like one of the exceptions is if you're able to prove that substantial or the normal working arrangement in that organization is such that you've always engaged contract labor for core activities, then you can continue engaging contract labor. Or if there is a sudden increase in work or there is some pressure at work, then you can have contract labor for core activities. But remember, this could be litigative and some issues. So therefore, generally speaking, we cannot engage contract labor for core activities subject to these exceptions provided under the labor codes. Then the contract labor has to be offered the same wages and same benefits as permanent employees. Uh, so therefore, again, like we have for fixed term employees, if we have contract labor and permanent employees doing the same or similar kind of work, then there cannot be any difference in salary or benefits of those employees. Principal employer will be liable for wages, statutory benefits, and welfare benefits for contract labor. So, for example, if there's a requirement to provide creche or there's a requirement to provide canteen, then the principal employer will be liable to provide these benefits for contract labor also. Now, under some draft rules, there was a requirement that the employer, the principal employer, should make payment to the contractor before contractor pays wages to its employees. That was in the draft rules. We'll have to wait for the final rules to come in on that. That's still not confirmed whether principal employers is required to make prepayment to contractors. That will be basis the final state rules that are notified. Now, when I talk about this whole prohibition on engaging contract labor for core activities, I also want to clarify that this prohibition is only applicable for contract labor. Organizations can engage fixed term employees for contract for core activities. There is no prohibition on engaging fixed term employees for core activities. So that is still possible under the labor codes. So these two new forms of employment recognized under labor codes, fixed term employees and contract labor. So Rishi, I'll pause. This is also a very important section. So I'll pause in case any questions on fixed term employees or contract labor piece.
Okay, sir, I'll just check. So as of now, we have just received 2-3 questions with regards to this section, and which is the company office is located in Mumbai, Maharashtra, but if it hires a person who is residing working from Rajasthan on remote work from home basis, which state government rules would be followed, sir?
I think again very complicated because the rules generally are applicable to the establishment. So if the establishment is in Maharashtra, then Maharashtra rules can apply. But again, this can be very subjective, so it will need a specific analysis.
Yes, sir. As an employer, it is beneficial for engaging fixed-term employee rather than permanent employee. If there are differences of definition in certain subjects of labor code related to say, state and central laws, then what will be considered?
So for again, like I said, for code on social security for employers with has and obviously it's complicated because we're talking about four codes and different rules. For code on social security, if you are present in multiple states, then state rules are not applicable. We have to follow the central labor codes read with central rules. But if you have presence in if for other codes for code on wages, OSHWC code and code on social security, if you have presence in multiple states, then still the state rules will continue to apply. So we'll have to look at different provisions, like for gratuity, because the provisions are in the code on social security, we may still have to pay them gratuity. But this prohibition on in Maharashtra rules that you cannot have more than 20% workforce is in the IR rules. So if you have presence in multiple states, then the Maharashtra industrial relations rules will apply to that organization, and therefore that prohibition will apply. So it depends on the sector in which you are engaged. It depends on whether you are present in one state or multiple states, and it's dependent on what aspect of labor codes are we talking about. It cannot be a general principle that can apply for all aspects.
Okay, sir. Sir, can an employer appoint contract labor directly instead of routing through labor contractor?
Yes, if you engage contract labor directly, either that person will be your permanent employee or will be your fixed term hire. So that is very much possible.
Is there a minimum period for fixed term
No, there is no minimum
employee?
period for fixed term. You can hire a fixed term for 1 month also. What is required is that all statutory benefits should be paid proportionately for the fixed term hire. So if the fixed term hire is eligible for PF, then PF should be paid proportionately. If the person is eligible for ESI or statutory bonus, depending on the wage ceiling, then those benefits will have to be paid proportionately. Gratuity, of course, will be applicable after 1 year of service. So those compliances should be done for fixed term employees, but there is no minimum period defined for fixed term hires.
There are guest lecturers appointed by the state government of freelancers will be falling in the contract labor category.
No, so if freelancers are not appointed through contract labor agency. For contract labor, there has to be three parties. There has to be a principal employer, there has to be a contractor, and a contract labor. So if the individual is hired directly by a company, then contract labor provisions will not apply. But if that freelancer is working like a employee, employer-employee relationship is established, then that individual could be considered as a fixed-term employee. But again, that is highly factual, depends on whether or not employer-employee relationship is established between the company and that individual person.
Sir, in case of labor audit, when fixed-term employees leave, how can they be held responsible for any kind of negligence that has happened in case it?
No, so a fixed term employees, if they leave on termination of their contract, then that does not qualify as retrenchment. So there is no retrenchment provisions that becomes applicable. This is a contractual period. So the person is hired for that contractual period, and the employment can be terminated after the contractual period. Of course, if there are misconducts and all, then you can follow the redressal and the disciplinary policies that's applicable for fixed term hires also, but a termination of fixed term employment contract does not constitute retrenchment, and industrial relations code provisions on retrenchment will not be applicable in those cases.
Okay, sir. So what is the percentage breakup for basic DA and retaining allowance in the definition of wage as per the Wages Code 19?
Yeah, like I clarified, basic DNS and retaining allowance are only inclusive components. What is wages is all salary components minus excluded components. So there is no percentage for basic DA and retaining allowance.
Okay, sir. So if we are deducting 12% PF on basic salary, and now if basic salary increases, how the PF will not be impacted?
But I'm saying basic salary should not be increased. I didn't say basic salary should be increased. I'm saying there's a difference between basic salary and wages. Your basic, say in that example which I gave,
Okay,
say in
sir.
this example, your total remuneration is 50,000 rupees, your basic salary is 20,000 rupees, your wages is 32,000 rupees. For gratuity, for ESI eligibility, for statutory bonus eligibility, we look at wages as defined under the labor codes. But for calculation of PF, we can continue making PF contributions on 20,000 basic salary. There is, I want to clarify this myth. There is no requirement under labor codes to keep basic salary at 50%. The requirement under labor codes is that you should have exclusions, and the exclusions cannot be more than 50% of the gross salary.
Okay, sir. So can all the employees be on contract as consultants?
No, but if you hire them as consultants, but in a sense there is employer-employee relationship established, they will not be considered as consultants. They will be considered as employees, right? It's not the nomenclature. It's just because you're calling an individual consultant does not make that person a consultant. Consultant is where you don't have exclusivity of employment. The person is not subject to your HR regulations. The person is not working full time for you. The person is not subject to day control and supervision. If all of these aspects are available and you still call that person consultant, that person from a regulatory perspective will be considered like any other regular employee.
Okay, sir. So you may proceed with your session now. We'll take up all the questions at the end by now.
Sure. So we've covered another important aspect, which was flexi hiring. So now we've covered four aspects. We've covered classification of employees, impact of definition of wages on compensation structure, impact on six key statutory benefits, and flexi hiring models. Now we look at the fifth aspect around HR and payroll policies. So I'm just giving you a snapshot of the kind of policies and processes that will undergo changes under the labor codes. It's obviously not possible for me to go through each of these aspects because that can be another 3 to 4 hours discussion. But a lot of aspects of employee hire to retire life cycle, whether it is around hiring, whether it is around payroll, whether it is around benefits, working times, employee relations, kind of documentation to be issued to employees, kind of committees that need to be set up, and other aspects. A lot of these aspects will undergo changes from a labor code standpoint. Maybe let me pick up a few examples in this. First, on payroll side, under labor codes, there is now a requirement that every employee, not just workman or a worker, every employee, full and final settlement of wages or the payment of wages have to be done within 2 working days. So if you have an employee leaving on, say, 24th of November, technically speaking, full and final settlement should be done by 26th of November. This full and final settlement is of wages as defined under the labor code. So that I'm sure you'll agree will change the whole payroll models and payroll process for organizations in a significant way. Second, appointment letters. So right now, companies have their own formats of appointment letter or employment contract and issue that. Now, under labor codes, under each state rule, there will be a specific format of appointment letter, and every employee should be issued appointment letter in that government notified format. So probably every employee in India will get a new appointment letter from respective employers once the state rules are notified. Then let me take another example of grievance redressal committee. So under the current industrial disputes or under the old Industrial Disputes Act also, there was a requirement for companies to set up a grievance redressal committee, but there was an exception where if company has their own grievance process, then they don't need to set up this committee. Now that exception is gone. So grievance redressal committee is now applicable for all companies with 20 or more workmen. So therefore, companies will have to set up these committees. So these are just a few examples of how the whole employee to hire to retire life cycle will change, and therefore companies will have to ensure that they look at all of these aspects and ensure compliance from a labor code standpoint. So I'm again, like I said, I'm not covering each of these points. Then another important aspect under labor codes is around health and safety, and three key aspects there. One on annual medical examination. So all states will have to come up with norms. This is as per state rules on when annual health examination is to be provided. All states have different rules around this as of now. In the draft central rules that were notified couple of years back, at that time, they said that it is applicable for all employees um, working in these sectors who have employees more than 45 years of age and who are eligible for ESI coverage. But again, like I'm explaining, annual medical examination will be as per the state norms. So you'll have to look at the state rules notified under labor codes to see when annual health examination is required. And generally, this examination is required within 120 days of the start of calendar year. So, but this is a state norm. Second, on special provisions for women employees, one is they have this principle of equal remuneration to say that they, the women employees should be given equal opportunity when it comes to recruitment or wages or conditions of work. So you cannot have any discrimination basis gender when it comes to recruitment, wages, and service conditions. Second, unlike all earlier law where each state will have different norms on whether or not employees can work in night shift and what roles, now there is a blanket permission that women employees can work in night shift in all roles, which is defined as 7 p.m. to 6 a.m. The only two requirements, as per the draft central rules, are one, there has to be consent to be obtained from the women employee. An employer is required to provide a transport facility and safe, secure, and healthy work conditions. Now, what is safe, secure, and healthy working conditions obviously is a matter of interpretation. But generally speaking, I think a very progressive reform if you look at it, because now women employee can work after 7 p.m. It's just that employers have to comply with these safety norms. Then, employers also required to set up a safety committee. Again, this will also be as per the state norms. In the draft state rules that were notified, central rules that were notified a couple of years back, they said that safety committee is applicable for all establishments setting with 500 or more workers, manufacturing, non-manufacturing both. But safety officers, at least at that time, was required only for factories or specific industries, not including non-manufacturing facility if they are 500 or more workers. So again, like I said, these are state norms. We'll have to study the state rules for all three aspects: for annual health examination, for the kind of benefits that are to be provided to women employees working night shift on after 7 p.m. and these aspects around safety committees and safety officers. But some aspects that will undergo changes for all organizations around health and safety at workplace. Then the other changes, like I said earlier, was on compliance front. So again, now they're talking of a common registration. So for PF, PSI, for principal employer CLRA registration, building construction work, interstate migrant worker, they can now be a common registration. Again, some of this will depend on state rules. I think one very progressive reform is for contractors. Contractors who provide manpower to different clients under the old law, under the old CLRA Act, they were required to take license for each work. Imagine if a contractor is providing manpower to clients in 5 locations, they need 5 different licenses for that one client. Now, under the CLRA aspect of or CLRA chapter of Code on Occupational Safety, Health and Working Conditions Code, they're talking about a common CLRA license that can be taken by contractors on a pan-India basis. Uh, they're also saying that for existing establishments, they don't need any new registration. They can just simply update uh, the any registration number under any central law on the Shram Suvidha portal. This again will be as per state norms. But remember, like I said in the starting part of my presentation, that state aspects around Shops and Establishment Act, Professional Tax, and Labor Welfare Fund are not getting subsumed under the Labor Code, so those will continue. They're also talking about single integrated returns that are to be filed, far lower number of registers that are to be maintained compared to the current regulation. So from a compliance standpoint, also a lot will change under labor codes. Focus on enforcement, they're talking about a completely online inspection scheme. They're now calling inspectors come facilitators. So it's just giving a friendly face to the regulator. Inspector come facilitators will be responsible for not just inspecting but also advising. So that's been added, especially as one of the responsibilities of these inspector come facilitators to advise companies, employers, and employees on the compliance matter. Of course, in case of any litigation, the burden of proof is on the employer. Like I said, in the earlier laws, the monetary penalties used to be very low. Those have been increased significantly, but at the same time, prosecution proceedings have been done away with for most offenses, except in case of very specific nuances or in case of a second offense. Under code on wages, they have a specific provision that an employee can actually directly go to a court and file a complaint. So employee does not need to go through a grievance redressal committee or labor inspectors, commissioners to file complaints. So that's one thing that need to be noted. So a lot of focus on enforcement under the labor codes. I think we've covered this. So, like I said, for specific industries, the appropriate government is the central government. For all other regulation, for all other businesses, the appropriate government is the state government, except that code on social security, where you have presence in multiple branches, multiple states, there again the central rules will prevail. So for multi-state organizations, for code on social security, the central rules will be applicable. For other 3 codes, the state rules will be applicable. Now, this whole piece around transition journey, while the labor codes are in force, and I think this is again a big question that we keep are getting asked by organizations, the fact that labor codes are notified but the state rules are not notified, how will the codes be implemented? Now, again, some clarity can come in on this, but the general rule is that provisions of labor codes that are not dependent on rules can be enforced immediately. So, like definition of wages, definition of worker, uh, impact on gratuity, leave encashment are not dependent on rules. So, therefore, those can be implemented immediately. But the provisions of the labor codes that are dependent on state rules, can be enforced only after the state rules are notified. So aspects like minimum wage, eligibility limit for statutory bonus, the limit of 20 lakhs on gratuity, aspects around working hours and overtime have to be defined in the state rules. So for these aspects, unless the rules are notified, we continue to follow the old provisions or old limits and ranges for these aspects. So therefore, we are in a transition journey as we speak. It is going to be a couple of months from now for everything to become fully functional, because the labor codes can be fully implemented only after all the central and state rules are notified. So we'll have to wait for that to happen for the labor codes to be fully functional. I also want to clarify that there are some states like Arunachal Pradesh, Gujarat, Karnataka, Uttar Pradesh, where some rules have already been finally notified. So we'll have to see the specific implication of these rules on the compliance under labor codes piece. I think we've covered this. I want to cover this last slide on uh, the preparation needed to go live. These are 8 areas, according to us, where work is needed. One is classification of employees, which is identify employees who qualify as employees versus who qualify as workers. This is, like I said, dependent on what is it that the individuals are doing on a day-to-day basis. Second is the whole impact of definition of wages on the employee salary structure. Uh, it's important to look at that. So we identify what is the new wages, reference wages, the impact on those 6 key benefits. Look at both the hiring models, flexi hiring model, whether it is contract labor and fixed term employees, impact on all the policies and processes, aligning them with labor codes, aligning them with applicable rules, aligning them with state SNE Act is required, compliance with all the health, safety, and working conditions provisions. Employee relations aspect, very, very critical. And lastly, the whole of compliance framework. So these are 8 areas where organizations need work to ensure compliance from a labor code standpoint. With this, I come to the end of my presentation. If there are any questions, happy to take any questions and answer.
Yes, sir. So, is there any change in periodical returns? What are the forms and periodicity of the filing in the new system? Has it been notified?
So all of that will come in the respective rules that are going to be notified.
Okay, sir. So, there a clarity on threshold is required. For example, annual health checkup for people above 45 have been made mandatory. Does this apply to each and every establishment or in accordance with the definition of factory only?
No, so you'll have to look at again the applicable rules. So if you're a manufacturing setup or a non-manufacturing setup, then the state rules will be applicable. When annual health examination will be required will be defined in the state rules. We'll have to wait for those to come in.
Okay,
It
sir.
is not enforceable immediately. I want to clarify. The requirement to provide annual health examination, because it is dependent on rules, is not enforceable immediately.
Okay, sir. So the labor code mentions single registration instead of multiple registrations. For a company which has factories under different states, whether single registration will be applicable or individual state registration will continue.
Individual state registrations will continue, because again the registration part will be under the state labor laws, state rules.
Okay, sir. Are there any provisions for offense which are punishable with imprisonment?
There are specific, so there are two things. One, for specific non-compliances, the prosecution proceedings can still be launched. These are different under each code. And second, for second offenses in some labor codes, if you, like, for example, we're non-compliant on the first time, there will be a monetary penalty, but I guess second offense on that same count could lead to imprisonment proceedings against the employer.
Okay, sir. Sir, if an employer finds that the state codes are beneficial, then can he or she opt from the central codes and vice versa? Is there an option to do so?
I think again a very complicated topic, because it depends on what aspect, what topic are we talking about. I would say that to a large extent the objective should be to harmonize both the central and the state laws. But where it is not possible, generally speaking, the as per the constitution, the central law will override the state law. But again, this is very subjective. This will depend on what aspect of labor codes we're talking about.
Okay. So there is one question, is that a company is not offering maternity benefit as it is the business is it is having school business, and is it required for them also to follow the maternity benefit provisions?
Yeah, to my mind, I'm not sure because I don't think there is any exclusion for schools from maternity benefit provisions, is my understanding, but it needs to be checked.
So how has the role and regulation of work and gig employment under the new labor codes affected
Yeah,
with the
yeah, good point. Very good point. So there's been a lot of media news also on gig employment. So gig employment from a labor code perspective is largely uh, when employees or individuals work through an aggregator like any of these platform service providers. Under the labor codes, there are enabling provisions for the central government to notify a social security scheme for gig workers and platform workers. However, as of now, we only have the enabling provision. The scheme has not been notified. So there is no immediate social security for these platform workers. It will only be applicable once the scheme is formally launched by the central government, which has not happened as yet.
will there be a dual compliance requirement during the transition period?
Yes, you're right. There could be some overlaps because, like I said, the general principle is aspects of labor codes that are not dependent on rules can be enforced, but aspects of labor codes that are dependent on rules cannot be enforced. So there's going to be a little bit of complication during the transition journey.
Okay, so will the format with respect to the appointment letter will be shared in due course, or it depends
Yes.
upon the...
It will be notified in the state rules for each state.
Okay, sir. Sir, can a company hire an employee for a fixed period of 1 year and renew it every year for the sake of contract labor?
Yes, it is possible, subject again to state rules. Like I said, Maharashtra rules that were issued earlier, they have to come up with new rules. But
Hmm.
the draft rules that were issued earlier said that you can have fixed term employees only for 3 years. But that's only for in the state of Maharashtra. So we'll have to analyze this basis the state rules that are to be notified. So I think I'll put this point across. So labor codes are not full and final as of now, right? It's a journey. This is only step one of the reforms. A lot of changes, rules will come in, amendments and all will come in. So it's going to be a journey for next couple of years. Not everything is full and final and is known for certain as of now.
Okay, sir. So taking up the last question for today. For a company which is yet to set up a crèche facility, the labor code states that it can be tied up with private crèches, but it also states that 4 intervals to be complied and distance also to be complied. How is it possible to
Yeah,
manage this?
again, wait for the rules to come in on this. There may be some relaxation that may come in for crash benefit also. Employers will still be liable, but how to provide crash facility, there may be some relaxation that may come in.
Okay, sir. Thank you so much for such a truly insightful session. The entire presentation was really enriching, which covered the fundamentals overview, the changes brought in, and the way forward for the social labor sector. On behalf of the ICSI, sir, I extend our heartfelt appreciation to you. We
Thank you.
look forward for further engagements also. I also express my sincere regards to all the participants for their enthusiastic engagement and
Yeah.
the questions they have put in during the session. Thank you all. Wish you a very productive and a very pleasant day ahead. Sir, thank you so much for your
Thank you
support.
so much. Really, really thank you so much to the Institute of Company Secretaries of India and to all the participants. And I think, Suruchi, you did a fantastic job of keeping us together. The
Thank
way
you.
you come in time to time to ask questions kept it engaging. Really, really grateful for the opportunity. Thank you so much.
Thank you, sir.
Bye bye.
Bye bye, sir. Yes.